Hey there, YouTube family. All right, Monday, we're back at it. We've had a very interesting morning already. Tesla's doing exactly what we thought it was going to do. It came down and ultimately it rose back above support at $260, which I identified for you guys. And now we're shooting straight up. Where's it going to go next? The trade range that I gave you guys was 260 to 290. But to get up to 290 and to prove that it could go that far, it has to hit and deal with and crunch through 277. And it looks like we're pushing to get there very, very quickly. The market's kind of mixed today. There was initially a pump up this morning on some big tech names. It seemed as if they went into the green. Now they're back to gray. It's a very mixed and speckled day. I think the market's going to be looking for some earnings from these big tech companies to determine if there is any justification for it to continue to climb, because you know that we have really been going up for the last 6 months on big tech since the beginning of this year. It's been an interesting weekend for Elon Musk. We see that Biden has sicked the dogs on him, coming out and questioning his connections throughout the entire world. He said, I'm not saying that Elon has done anything bad, but we're going to begin to watch this guy. Personally, I think the problem is that he has upset the norm. He has bucked the attack against free speech in this country by all of the news and data that he's allowed to get distributed through the Twitter platform. So that's the problem. And you know what? I think he's in a risky spot. I mean, he's not all about the money. He seems to have some very defined worldviews that he seems to be unrelenting on. And I think, to be honest with you, it scares me for him. I wonder how successful he can be and how far he can push the powerful people. Then he recently talked about some of his ambitions by switching the name of Twitter to just X. One, that's a massive branding change, and it really shows how much he is taking control or taking ownership of Twitter as a whole and what that platform is going to represent. And he also began to give a sneak peek of how they were going to integrate and introduce payment systems and monetary systems through Twitter or through this new X. And to be honest with you, now he's fighting the big banks. Now he's putting himself head to head with the SEC, which I am just shocked at his ambition and, to be honest with you, his goals. I'm fascinated to see how it all goes because, to be honest with you, it almost seems like Elon against the world, Elon against big banks, and Elon against politicians. And so I am fascinated to see how it turns out. But I've got 4 great stocks from 4 different categories. I'm going to be talking about a meme stock, AI stock, big tech stock, and healthcare stock. So I've got a great variety for you guys. There's some investment opportunities here. This is the Stocks with Josh show. As always, I just want to thank everybody for the likes that I routinely get on my videos, as well as the very interesting comments and feedbacks that I get. I enjoy engaging with you guys. I just want to send you all my best wishes for your success in the stock market this week, that you would have great winning trades. Thank you for the likes. If you're new to this page, hit subscribe to get my next video, my next chart, and my next prediction on these fast-moving markets. I wanted to give a quick shout out to my friend Stock Up with Larry Jones. If you're unfamiliar with his page, simply go over to Stock Up with Larry Jones and check out one of his recent videos where it's titled, I'm Pissed. I thought it was an awesome video with straight talk, real talk, honest talk about the way things are in the United States and a good conversation about money. I think it's a can't miss video, so do me a favor and go over there and watch that video titled I'm Pissed over on Stock Up with Larry Jones's page. All right, we know we've got a big week this week. We've got Google's earnings tomorrow, and Google is one of my biggest plays that I'm invested in. I've been talking to you guys about on this page. I've got strong opinions and technicals to give you guys today of what I think is going to happen. I'm going to get into that in just a minute. So tomorrow is Google's earnings, Snap's earning, and Microsoft earnings. I'll just comment briefly on Snap and say that we're in an interesting place on Snap. We're definitely at the top of the local range, and there's a huge opportunity that if they come out and deliver on earnings, that if they break above their current range, above $13, this thing could actually double from here. And so there's an interesting opportunity. But if they turn around and they miss or they don't do well in this earnings, then yes, we're at the top of the range and we could sell back off easily down to $6. And so I'm definitely watching Snap. Microsoft, I'm not going to get into detail today on Microsoft. I'm probably going to cover Microsoft after their earnings announcement. I can just tell you that they're in the same position as some of the other big plays like Meta, where where they're in what I'd call a rising wedge, which is super bearish, which means that once it breaks down beneath that wedge, it's going to be bad news for quite a while because it's been highly overbought. But here's the thing that I want to just warn those who are getting too bearish too soon is that right here at the end, before that breakdown, you can have a whipsaw volatile day, which can skyrocket you back up to the top of that wedge, only to then bring you crashing down in the days to follow. So until you get a strong confirmation that the trend is now going down, you don't want to necessarily bet against Microsoft. And then Wednesday, we've got a very big day. We know it's the FOMC day, and it's not the interest rate that we're likely going to get that will trouble the market. It's the conversation or the dialogue by the Fed or the Feds. What I'm actually thinking, and maybe a little bit contrarian, I actually think that if he were to come out too dovish, that it would spook the markets, because personally, if he maintains the exact moderately hawkish tone, that's what I think the markets want, because it causes us to believe that he's keeping an eye on the inflation while acknowledging that the economy is still strong. If he came out super dovish, that would cause me concern that he would be seeing that the market is softening and the economy is softening up. But I want him to maintain business as usual, be moderately hawkish, give us the rate hike that he told us he was going to give, and keep it simple. And then I think the markets could then look to the earnings to see whether or not the individual stocks should go up or down. That to me is what I'm hoping for. We also on Wednesday have Meta. That's a big one. And similar to Microsoft, it's in a rising wedge. And so it's more bearish to me overall, but I'm expecting that we could see some whipsaw action on them. And so you want to be careful about entering into a short too early on Meta, because this thing could go back up and touch the very top of the range before deciding that it would fall down from there. And we've got Coca-Cola. That's one that I watch. I've covered the last couple earnings. I'll probably talk about it in the coming days as well. All right, I'm going to lightning round 4 stocks for you guys. The first one's going to be APLD. They came out with their earnings pre-market today, and it was a good earnings. Revenues have really jumped up. They went up around 193%. They reported a net loss of a negative 7 cents on a higher revenue. Overall, the earnings were a little bit what I would say in line with expectations, but leaning towards the positive. But here's where the earnings got really, really interesting. It is in the forecast or the projected growth. Now that's where things got super interesting. And that's the whole story with APLD. It's not exactly where they're at today. It's what they're doing with their assets and resources to seize on the AI opportunity. The CEO is expecting revenue growth to $385 million to $405 million and adjusted EBITDA between $195 and $205 million. So man, if he can follow through and achieve that, then this company is going to do very, very well. He said that their focus is on developing business in the AI cloud service, as well as utilizing their data centers for high performance AI needs. So let's just talk about the technicals. Guys, I've given you some clear technicals on APLD. I've pretty much identified that we're in a really tight trade range between $7.80 being sort of the lower support range and $9.90. Now, we've broken beneath the $7.80 range a number of times, but here's what I want you guys to see in the charts today. This will be a great lesson, a great technical lesson for everybody. Look at how APLD is consistently making a higher low. The low that it hit after it had that big spike up, it came down to $6.80, then $7, and then $7.02, and this last time, $7.50. And so here's what I see. It's a perfect spot to put your stop loss right beneath the last low of $7.49. Now, moving up from here, here's the other thing I see. It's that $9.90 has actively served as resistance over and over and over again. And here's what you guys could learn today. One, we're making that higher low, and we're squeezing towards that place where we've constantly hit up against that wall of resistance. And the minute that we get above it and close above it and maintain that for at least 24 hours or going into the week, we know that what had once been hard resistance, that $9.90, is going to serve going into the coming weeks and months. It's going to serve as support. So that's not been proven. But perfect spot for a stop loss, $7.49, because we're respecting this higher low trend then we've got a perfect target that if we break above 990, we know that we're getting into the next price zone, which would be between 990 and around $13. Now, what if the $7.49 price range broke? Well, I've already given you guys that this could go as low as $5. So that's where historic support is. So let's say the markets or this particular company continued to get beat up with some bad news. It broke beneath $7.49. I would say that it would then be safe to let it come all the way back down to wherever it's going to settle. It's going to move sideways because that's how stocks work. When they come back to a correction spot, they have to rebuild on that level to build support. You got to remember, this stock was under $1 within the last year. So for it to have to come back, if it broke 750 and it came back and reconsolidated under $5, that would actually be a very bullish narrative. Now, I'm not currently expecting that, but that's the scenario that I want you guys to understand. I'm going to actively trade this stock moving forward. It all comes down to whether or not you believe the CEO and his narrative that they're going to drive up revenue, ultimately gross revenue to around 400 million potentially, EBITDA to around 200 million, which is a massive gain from where they're currently sitting, that they're a well-positioned company to take advantage of the AI craze. And whether the stock right now is cheap, they're going to be going potentially from a negative earnings per share over the course of the next couple years to a positive earnings per share. That, in my view, as I said to you guys the first time I covered it, it could cause this stock to jump all the way to $30. That's the game that you're playing. So if 750 breaks down, then then the reaccumulation phase would be from $5 upwards to 750 again. But if we break right now above 990, we're going to enter into that higher zone already. So you have to decide what your level of risk is and what you're interested in doing with this stock. I'm in the stock right now. My stop loss is set at $7.49. All right, let's talk about AMC. I want to slightly recap my video from yesterday. I told you guys that AMC has got some strong problems that it can't overcome. Now, mostly all of my comments on my videos, 98% are super positive and encouraging, and I thank you guys for that. But I do get people that push back and kick back, and I'm just going to address a couple of the pushbacks that I got on my AMC video. One of them was the criticism that I said that AMC went to the moon when it ran up 100%, which to be honest with you, after I said it and re-listened to my video, I did think to myself, hey, 100% to the moon. Maybe I shouldn't have said to the moon, but I thought about it a little bit and I thought I would break down my view of a run-up or percentage gain would look like in my eyes. So I'm going to tell you guys that a 10% pop in stocks, I'm going to call that a win every day. A 20% pop in stocks, I'm going to say that's a score. 30%, I'm calling a payday. 40 to 80% is buy Lambo now. And 90 to 100% gain on a stock absolutely is mooning. That's a moon bag win. And really, I view that as a sell, sell, sell. If you get up 100% on a stock and you're not taking profits, then I'm telling you, you're shifting from bull to hog and you might end up getting trouble. And that's kind of what happened in AMC over the weekend. On Friday, we saw it after hours go as high as $8.75. And then this morning, it dropped 40% from there, all the way back under $5. Now, let me give you guys some fresh technicals on AMC, just real quick so you have perspective on what I think is going to happen. Now, before I do that, I'm going to mention that a friend of mine from out of the country texted me over the weekend and say, Josh, should I load up on AMC? Is this thing going to the moon? And in my view, of course, as you guys know, I said it already got there and it was time to sell. And I said, no, dude, hold off, be careful. Let's see how AMC acts Monday morning. And it obviously has fallen down quite a bit. But here's what I'm going to tell you guys. The trade range for AMC that's above us right now is between $6.30 to $7.50. And so if AMC can close back above $6.30, then it could push all the way up to around $7.50. That's what I think the immediate trade range is right now. But likewise, if it gets rejected at $6.30, well then, as I said, we're looking at that candle, how it forms over the course of the day, the week, and the month to give us a clue as to what the future for AMC is. And as I pointed out the previous candles, they had these really tall bearish wicks, and they all pointed to the stock making a new low after it had popped up. So that's what we're watching. If it holds 630, then it can build a new bullish story from there. But right now, that's the local trade range. Good luck on AMC. All right, before I get into the next couple stocks, if you need better trade tools, check out the offer from the moomoo investment app. I use it every single day. One, because I'm in a chat group there called Stock Josh Fam. It's a great community of traders. But here we are in earnings season. I want to mention again, I love their earnings calendar. I use it every single day to keep track of the next pop. If you don't have the moomoo app and you need better trade tools, click on the link in the top pinned comment and you can see that they're offering up to 16 free stock as well as a $50 bonus. Each and every one of those stocks could be valued up to $2,000. It's like a stock lottery. So go ahead and click on the link in the top pinned comment to check out the details for the moomoo app. All right, let's get into Google. You guys know that Google is one of my big plays and I consider it an investment grade stock, giving it a B rating. But let's get into the little bit of the narrative and the technicals so we can understand. Again, if I think if it went up to 140 bucks, and in my view that was hitting the moon, but you guys think it has to get to 300 to hit the moon, I want us to be on the same page. So let's get into what that's going to look like. Google has so far this year shot up 50% in 2023 alone. And so what I think it's doing right now is for the last couple of months, it's been slowly digesting that big move up. That was a monumental move up. You got to remember, this thing was $84 last November in 2022, and now we're sitting up at around $122, and so that's already been a big win. So we need to define that coming trade range. I actually think that they're going to do really well in earnings. I think they're going to beat expectations, and I think they're going to show the industry that they're not losing the AI battle, but that they're right on top of it, and they're going to be the ones who lead and beat Microsoft and ChatGPT with Bard. I believe that that's exactly what earnings is going to look like tomorrow. They're going to come out fighting and they're going to be pushing that narrative that they're the ones that are going to win the AI race. And so that's what I'm trading towards. The market expects an earnings per share of $1.32 and revenue of $72.78 billion. Let's get into the technicals. We've pretty much been moving sideways since May, and the area that we've been constantly hitting up against is that $125 range. That's been hit 17 times, and 17 times it's failed and come back below 125. And so here's how that's setting up. We're setting up again in a long sideways action up against the same price repeatedly and repeatedly, that 125. And here's what's really bullish about that. Yes, we could ultimately that could become the level of rejection and we could go back and test the lows. I think we recently did that when we hit 115. But I think what's going to happen is if they come out with that strong win attitude with integrating AI, I think that we're going to defeat that 125, and that's going to push us up potentially to 134, 136, and open up the door to a much higher range. Now, if we want to be sober-minded about the chart, it's actually been giving us lower highs and lower lows ever since it first came up and hit 125. And so we actually have had a very strong local bearish trend. Now, to be safe, you could put your stop loss, in my view, at $118.68. That was the most recent local low. But if we defeat 125, which I'm telling you has been a long-standing resistance, we then would push right up into the 130s and then possibly even as high as 140. So to be absolutely clear, stop loss at 118, trade range on the low end is at 113, and on the high end 136. So we're closer to the top of the trade range than we are to the bottom, but we're more in the middle. And I think this earnings is going to be a deciding moment for Google. But we also have to be careful because let's say we get that pop and we get all the way up into the high 130s, we could then the momentum of the market could begin to still slow down, and we could find ourselves bleeding all the way back down to 113 by the end of this year. Now, I'm not predicting that. I'm just saying those are the trade ranges. We've had a big move up from $84. We're up here at 122. And so we're either going to get up into the 140s and stay there for a while, or we're going to eventually pop around 136, and then we could bleed off to 113, depending on how the rest of this year shaked out. Those are my thoughts on Google. And like I said, I'm looking for a win, a score, or a payday tomorrow on earnings. Let's see how it shakes out. Okay, the last stock that I want to cover is GEHC, GE Healthcare. These guys are also reporting reporting tomorrow. This has been a real winner for me as I got in early on in the 60s and now we're up here in the 80s. And I think that they're going to actually surprise Wall Street with a beat for earnings. And I think that we have the ability, if we can break above $82.40, which is resistance, I think we have the ability to go back and retest the highs on GEHC. So I'm expecting a move potentially up to $87, and I have my stop loss set on this one for $79. But I think that there's even more opportunity ahead of it. Once we get above $87, we're back into price discovery of how high this can go. So I think that we're still in a clearly defined uptrend on GEHC. From the last earnings that we got, it sort of processed the move up, and I think if they follow through with another good earnings, we're going to go back and retest that 87. All right, that's it for today. That's all I've got time to cover. After I post this video, I'm going to go back into the moomoo chat for a while and talk with you guys some more and run some more technicals on interesting stocks and stocks that I didn't get a chance to cover today. As always, thank you so much for the likes, but you got to hit the subscribe if you want to keep getting these videos or if you want to get the next video. Guys, the market's doing well. Tesla's up. We're making money. We're winning. We're scoring. We're getting the payday today. Let's see how tomorrow with Google plays off. That would be a great win as well. Hope you guys are all successful today. We'll look forward to talking to you some more in the chat. Peace and blessings. Bye-bye.